Hi, this is the Movers and Shakers show as we look back at the big moves over the course of the month before and try to gauge whether we are going to see a continuation of those big moves or whether it's setting us up for a potential reversal. This time around, we're looking back at October. So let's dig into the best and worst performing assets within the indices, FX, and commodity space. So here it is. First and foremost, this is the breakdown for the performance of some of the top indices out there. And you can see it's not been a great month, to say the least. October seeing pretty much every one of them in the red. The one outperformer comes with the Nikkei 225 and Japanese stocks just about keeping their head above the parapet and posting a 0.42% gain for the month of October. On the flip side, we've got the Nifty 50 over in India with over 6% loss over the course of the month. So we can jump into those two charts and talk about why this is happening and whether we could see a continuation or a reversal come into play. So here is the chart for the Nikkei 225. Crucially, I've overlaid it with the dollar yen FX pair, as you can see here with the purple line, which has been gaining ground, reversing much of the downside that we saw over the course of July and August. And certainly that bottoming out for dollar yen and crucially, essentially a reversal for the Japanese yen has come at a time when, of course, we have seen Ishiba come into power, a surprise winner in terms of the presidential position, or the prime minister, I should say. And there was a lot of talk about how he is all for staying on the pathway of further tightening and a move away from so-called Abenomics or Arbonomics. And that has lasted all of less than a week, quite frankly, because as soon as he claimed victory, he started to turn into a more sort of dovish stance. And then since then, he's called a snap election. That snap election resulted in the LDP party essentially losing their majority. It's been an embarrassing period of time for the new prime minister. And so that points towards them potentially needing to shore up leadership. He may potentially be on the way out. And even if he doesn't leave, there's a good, strong possibility that we see those more aligned with Shinzo Abe gaining power. And therefore, the strength of the argument that we're going to see plenty of tightening from the BOJ really has been fading. It comes at a time when we've also seen wage growth fading significantly. We've seen inflation moving significantly towards the downside. So the case for significant tightening is really easing. And so with that, we're seeing weakness for the Japanese yen. Weakness in the Japanese yen typically goes hand in hand with strength for Japanese stocks because they benefit from the fact that the weak yen brings a more competitive environment for them abroad, so they get to export more. And also we see greater tourism as people take advantage of the Japanese economy and people like to visit the country when the yen is weak. So that inverse correlation is playing out exactly here. You can see the rebound in the yen or in dollar yen providing a rebound for the Nikkei 225 and helping to support it at a time when other indices are performing well. The key thing here is really, the question mark over whether we've seen a top in dollar yen. We're back into levels not seen, if I was to just hide this part of the chart, right? So we're looking at the dollar yen part of it. We saw a strong uptrend. And then we saw that big pullback into support. The question mark here is now that we're back into levels that we were previously seeing intervention from the BOJ, are we going to see intervention once again? That's a big question mark to potentially send dollar yen lower and therefore the Nikkei 225 lower. That's a possibility. And also there is, of course, a possibility that this sort of dollar strength story has played out and we start to see possibly the US dollar start to weaken as interest rates are being cut and the like. So I would say, a lot of this, the trajectory of the Nikkei 225 comes down to the likes of dollar yen and specifically the Japanese yen. And so there's still some question marks over exactly how this is going to play out going forward. In particular, the possibility of intervention from the BOJ. They wanted to strengthen the yen. They managed to do that for a period of time, but now we're rebounding back into levels where they had to intervene previously, and also at a period of time where we've seen a rebound in terms of the US dollar, which might not necessarily last. If we see the election risk out the way, possibility of some downside in terms of treasury yields for the US, the possibility that we see a risk on move for global assets, potential move out of the US dollar. So that could all feed into a potential rolling over for the Japanese index and Japanese stocks. But certainly as things stand, we can see that we're still in this sort of upward trajectory, with a move up through that 40K mark, once again, providing us with a continuation of that. I'd just say that the further we get into this zone between 40 and 42K, the more at risk it is of Japanese intervention, which could potentially see this market roll over. We've also seen plenty of weakness in India, and we can see that really you could time it perfectly pretty much with this significant move low over the course of October. The question mark is whether this is going to be a protracted move. Of course, we've got some concerns around global trade, and India has actually been a big benefactor of the breakdown of relations between US and China, and the weakness essentially in China. And we've seen real strength for Indian manufacturing of late. But we've seen this pulling back, and we can see that we're back below this middle Bollinger Band, which is essentially the 20-week moving average. So, I think there's a good chance that we're going to see the buyers come back into play once again. We have got a very strong trend, and generally you could say, well, we're below the middle Bollinger Band, but you can see that time and time again, we do sort of move below that, often touching the lower boundary of this indicator. So, are we looking at a market that's oversold? Well, we could see a little bit further downside, but I think we're sort of in that area where we're likely to see the bulls come back into play soon enough. The stochastics into over sold and started to turn higher once again. What we want to see on an intraday basis is a potential break from what we're seeing at the moment, and that would mean a potential move up through your sort of middle Bollinger Band. But crucially, if we fail to take out that low here at 23893 and we start to move up through your sort of 24492, then we start to build a more bullish narrative with the breakup through that 20 SMA, the failure to create that lower low on the wider time frame, and a creation of a higher high on the intraday time frame that could give us a little bit of a boost coming into this new month. But certainly you're looking at a relatively a very strong performer over recent times, and so these pullbacks generally get looked back upon as a potential buying opportunity. The caveat, of course, is if Donald Trump comes in, we could see further concerns as people worry about what the imposition of significant tariffs on some of the major exporters could do to these economies. So certainly one to watch as we move forward. Next up, we're going to be looking at the FX space. The FX space has been dominated by the US dollar at a time when we've seen a big move out of move out of some of these riskier, so-called riskier pro-cyclical FX currencies, notably the Aussie dollar, New Zealand dollar. I've already explained the Japanese yen move that we've been seeing here, but we'll talk about that in a sec as well. But essentially, the US dollar, it's come at a time where we're seeing risk off coming into play. We're seeing a rise in terms of US treasury yields. That makes it more attractive to have US dollars. We also see the election coming up, so we're seeing greater sort of move towards the US dollar. There's a perception that Donald Trump's policies, and he seems to be in a driving seat according to market expectations, that his policies could be inflationary, that could quell the pathway for rate cuts, and certainly that perception of 250 basis point cuts for the rest of this year, that's gone out the window. Markets now pricing a 70% chance that we see 2 rate cuts in total, rather than 4 in total. So essentially 50 basis points in total rather than 100 basis points in total. That's what markets are pricing now, with an actual fact, a chance we only see 25 basis points worth of cuts. So we've seen a significant shift away from rate cuts towards a slower pace of easing from the Federal Reserve, and that has benefited the US dollar. And on the flip side, we've got the Japanese, where we're seeing question marks about whether we're going to see any additional rate hikes, and if we do, whether they're going to be substantial at all. We've got a new prime minister who's already been undermined in the polls when he called a snap election. And so we've seen the Japanese yen really moving sharply towards towards the downside, upside in terms of the likes of dollar yen. That's exactly what we're going to look at here. The strongest against the weakest, it's dollar yen. We did essentially tentatively look at that previously, but let's look at exactly how this is playing out. Crucially, came into this key support level down here at 140.2, essentially 140. And we've been rebounding since, seeking to gauge whether this is going to be a wider rebound or whether it's going to be a shallow one. Well, we've broken up through your first resistance level around the 149 mark. So we're looking at a potential wider retracement into play here. Look, you could say we're just going to continue that long-standing trend, perhaps. But I think that there's a good chance that we do see the Japanese yen supported once again soon enough, and there's question marks about whether we're going to see intervention. That could also come into play. Have we seen anything to say that this is the turning point for dollar yen? Not quite yet. A move below this 151.4 mark could give us a bit more confidence. But as things stand, I think there's a good chance we do see further upside over the near term, especially as we head into the US election. And, what happens from that election could be key and could essentially, after the sort of volatility has settled down, that could mark the top for dollar yen. There's a good chance that could happen. But certainly we're waiting for that turning point for this currency pair. We haven't seen it quite yet in my mind. We've rallied up into the 61.8. Above that is the 76.4 fib, which is around about your 156.6. So near term, we're pushing higher, but we're coming back into the realm of the area where we've seen the BOJ intervene in the past. And certainly, I still think there's a good chance we do see some tightening from the BOJ. And, there's question marks about whether we've got a little bit extended towards the upside when it comes to treasury yields, when it comes to the US dollar. So I'll be watching out for those intraday charts for a signal that potentially we could start to see the bears coming back into play once again. And finally, on the commodity space, Palladium is one that I've been watching a lot recently. Bear in mind, Palladium really has fallen out of favor over the years as people move towards electric vehicles and away from those that need catalytic converters. And essentially, this huge source of demand just goes out the window, right? So we've seen a massive capitulation in terms of its price. But now we're starting to see it perk up a little bit. Part of it is trying to piggyback on the precious metals move. Part of it is the prospect of a Chinese resurgence and a significant boom over there and significant raft of increased spending in China. And then on the flip side, you've got nat gas, which is really underperforming at a time where we're seeing a heightened chance that we see Donald Trump come into power. And in his own words, he would end the Ukraine-Russia war within 24 hours. Well, if you cast your mind back, it was the beginning of the Ukraine-Russia war, which saw a spike in terms of natural gas prices. And so the ending of it might see those prices depressed. We've seen natural gas hit as a result. Let's just jump onto the chart. First and foremost, this is Palladium, and I'll show you it on a monthly time frame just to show you exactly how bad it's been for the bulls or good it's been for the bears. This is the monthly time frame, and you can see exactly why I've been looking into this a lot recently, because I didn't necessarily want to call a bottom, but it looked very bottomy to me. I mean, ultimately we've been sort of flatlining, then we start to tentatively create these higher highs, higher lows, and now we've broken up out of this zone of support that's essentially dominated, this sort of basing pattern has dominated this year thus far. The next level that needs to break is this level, which you can see is exactly what got respected, 1245, and we're heading sharply lower off the back of that move. So it's been a great October, but as we've started this new month, you can see that a lot of that has been trimmed already, but we're pulling back, and that pullback could ultimately just resolve with as a retracement. So certainly worthwhile watching out for these support levels, 1083 and 1044 on 76.4 and the 61.8. I think there's a good chance that we have bottomed out here, quite frankly. And so, you've got to look out for whether we start to see the bulls coming back into play once again. But we're pulling back here. But certainly, there is a possibility we could have further in the tank towards the upside. And therefore, the fact that we've respected that resistance level isn't necessarily surprising given the substantial nature of it. But the fact that we're pulling back, maybe this comes into a key support level and starts to see the bulls coming back into play once again. Here's the 4-hour chart. So a bit of a rebound, and now bearish engulfing as we close out this week. So look out for these key support levels. If we start to see a potential reversal with the rally up through your swing high, then we could possibly see some bullish setups coming in play for Palladium, with a breakdown below this 982 required to negate the idea that we are going to continue to trend higher, which is what we've seen since the lows here in August. And then finally, Nat Gas. This is the daily time frame. You can see that we're now on a sort of bearish trajectory set within a symmetrical triangle that's dominated 2024 thus far. But if you can look on a monthly time frame, this is how dramatic it's been, right? So we've got, of course, that massive run up with the whole Russia-Ukraine thing. Then we saw the massive capitulation as Europe essentially resolved its supply chain and looked elsewhere. And if anything was oversupplied, right? Its tanks were full to the brim, and they made sure that they were doing it well ahead of time and buying up the gas to ensure that there wasn't a crisis once again. And now we're sort of trying to see any sort of resolution to where we are at the moment. And that could come with some sort of peace deal between Ukraine and Russia. It seems somewhat distant, but certainly if Donald Trump comes in, and sentiment-wise, that could push this market towards the downside once again. We're looking here at support that's currently being challenged at your 2160. So a break below that level, you'd be looking down towards your sort of twos, which is where that ascending trend line is. But certainly, as things stand, this election looks to be a key one for natural gas prices, given Donald Trump versus Harris's stance. But also we're in the middle of the winter period once again, which of course is the period where we see drawdowns in terms of inventories. So we'll be keeping an eye out for those inventory levels, in particular in Europe, to make sure that they're continuing to top up their inventories and their supplies well enough to stave off any sort of crisis. So if we suddenly see a really cold winter in Europe, you might see some of those stories resurface about supply constraints and people desperately trying to get oil from wherever they can. And in the past, that has taken shape from buying it from the US in particular, which pushed up prices. And at times it's buying it from Asia, which controversially can take the form of Russian gas sent over to China, put onto a Chinese ship and being told it's Chinese gas and then sent back to Europe. So yeah, ultimately, sometimes they get around these sanctions anyway. So look out for the support level. And if we break through that level, we'll be looking down at this ascending triangles support level that continues to rise towards price action for natural gas. I hope this has been useful. Have a great day ahead whenever you're watching this video. And hopefully we'll see plenty of fireworks for the month ahead, for the month of November. This is a roundup for some of those big movers for October with a view to looking to how things could play out in the month ahead.